Hello, everyone. Welcome to a weekly update on the financial market. My name is Tian. This is a very wild week on Wall Street. It ended as it began, with the retail army blowing up short bets, punishing hedge funds, and meeting small fortune of the most hated shares. Following relentless promotion on Reddit's Wall Street Bets forum, GameStop Corp surged 68% on Friday, taking its 5-day gain to a staggering 400% as the SP 500 index fell 3.3%. Shares of the video game retailer had tumbled Thursday when popular investment platforms including Robinhood began restricting trades, but the rally revived after the curbs were eased. Something else that survived the week, the gaping chasm in sentiment between day traders who view GameStop as their way to fight back Wall Street. And on the Wall Street, the industry professionals who are convinced that the bubble will eventually burst. People are saying something like, you can have this euphoria go on for a while, but someday people are going to put down their phone and get back to work. And then there's going to be too many sellers and not enough buyers of that stock. With that said, a pair of billionaires investors are swooping in to support a short-selling hedge fund in its battle against an army of the day traders from Wall Street Bet. The legendary trader Steve Cohen's Point 72, Ken Griffin's Citadel, and other partners plowed a total of $2.75 billion into Melvin Capital. The hedge fund said on Monday they will receive non-controlling revenue shares in Melvin in return for their money. Melvin Capital takes more negative positions than most of Wall Street rivals, exposing it to potentially very heavy losses. It owns bets against 17 US listed companies, including GameStop and Bed Bath Beyond, at the end of September. Later in this week, Melvin admitted that they have lost more than 50% in January 2021. Robinhood CEO said Robinhood's move to stop trading in certain speculative names was in the best interest of the company and its millions of users. He said on Thursday evening to CNBC, in order to protect the firm and protect our customer, we had to limit buying the stocks. Robinhood is a brokerage firm. We have lots of financial requirements. We have SEC net capital requirement and clearinghouse deposits. So that's money that we have to deposit at various clearinghouses. Some of this requirement fluctuate quite a bit based on volatility in the market, and they can be substantial in the current environment where there is a lot of volatility and a lot of concentrated activity in these names that have been going viral on social media. He denied there was any existing liquidity issue at the firm and said Robinhood has already tapped the credit line of $1 billion as proactive measures. However, the frustrated investors has already sued after getting locked out of trading in fancy names like GameStop and AMC and BlackBerries. Many people are talking about how the GameStop game will eventually stop. A Bloomberg opinion article listed out at least 4 possible scenarios. First of all, you could possibly imagine a story like the stock will keep going up to $1,000 as people realize this is really a $70 billion company with enormous ability to grow earnings and expand margins. And then it stays there as GameStop executes on its new plan and becomes the dominant player in the video game industry. This is a possibility, probably not a big one though. You have to think in the line of Tesla, where the stock price skyrocketed because the market come to understand and believe the company's long-term vision. A second possible endgame is like the stock keeps going up to $1,000 and a lot of hedge funds will get bankrupt. And eventually there's going to be a butterfly effect, negatively affect the stock market in general. This is possible. To make it a little bit more possible, probably you have to add something else like GameStop will eventually become a component company in SP 500. GameStop is not currently a SP 500 index component company. It has a market value about $24 billion, not big enough. If the price keep going up, it's probably going to meet the 500 company threshold. However, the SP 500 index is not solely based on the market capitalization. You still have to be profitable for at least 3 quarters. And in the case of Tesla, even 3 quarters is not enough. You probably have to be 4 quarters profitable. So it's not going to be a short-term thing. Every other end game has the basic thing like the stock price will keep going up to something like $1,000 and then it will crash back down again. This is how a bubble will work, and this is how a bubble will end. The trick is you have to figure out if that's the end game, who you are going to sell your shorts to, who are going to buy it. Eventually, something theory like I will sell to someone who has no choice but to buy no matter the price. It's much better than a theory like I will try to sell to someone dumber than me. Lastly, another possible endgame, according to this Bloomberg article, is that we all get to become tired of talking about GameStop. That eventually no one talk about that. Perhaps the stock price goes up, perhaps it goes down, but we stop checking. Another similar scenario is possibly the company will be post trading for a while. The top security regulator in Massachusetts already said the New York Stock Exchange should hold trading in GameStop stock for 30 days so it can cool down. We're going to see how which scenario will play out. Now let's take a look at history and see if similar scenarios has already happened before. In October 2008, a Volkswagen was the world's biggest company because of takeover attempt by Porsche that turned into one of the biggest short squeeze in history. To say that the price soared is probably underestimated. What happened? Earlier that year, Porsche has acquired a large strategic holding of Volkswagen shares and publicly stated that it did not intend to increase that to 75%, which was the amount required for takeover. The reasoning was that the German state held around 20%, so Porsche reasoned that it would be too difficult and expensive to acquire basically all other shares on the market. It is speculation that a lot of people thought that it would be a good idea to short the stock since Porsche might sell its position. On October 26, 2008, Porsche revealed that it had increased its stake from 31% to 43%, plus another 31% in option, making up a total of 74% of the outstanding shares of Volkswagen. As of that day, 13% of the shares outstanding was on loan to speculators who had shorted stock. So if lower the states didn't intend to sell them anyway, which they didn't, all of the outstanding shares will not be enough for those short sellers to cover their position. So that is very similar to the current GameStop case when the stock is over shorted for 1.40%. So eventually the price goes up to 1,000 euros, up from 200 euros early that year. Uh, and of course, after the whole things, a couple of hedge funds and investment banks lost tens of billions of dollars and ended up paying for a huge portion of Porsche cost to acquire Volkswagen. The price eventually came down and very sharply to around 200 euros of that year. Here's another example. In 2018, investors briefly um, believe a marijuana company, a Canadian company, listed at $17 per share and sent it up, skyrocketed to around $300, about a $1,700 increase. And by the end of that year, it was about $70 already. And last Friday, it closed at $18 per share. The subscribers on Wall Street Bet have sharply increased from around 3 million to more than 7 million users. And we should point it out that it is not only the retail investors from Wall Street Bet on the long side. There are also many institutional holders of the GameStop, including BlackRock, Vanguard, Morgan Stanley, and Goldman Sachs, among others. Many probably through their creation of index fund or other type of proprietary trading. Well, lastly, in these days, there are many new ideas on trading. Reuters reported an interesting article. So we all know that Bitcoin has been going very well as since the start of the year, and many might argue that if we have a crystal ball, we can read the future movement and trajectory of Bitcoin, and that will help us trading. And yes, there is someone, a astrologer, are trying to do that. This New Yorker has been following the movement of celestial object to predict Bitcoin price fluctuation since last summer. And she has already built up a 1 million strong social media followers on TikTok. Recently, the 22 years old told her followers to watch for a price correction on January 11. And why? Because Saturn was going to cross Mercury. That's an interesting observation. Not sure it should be considered fundamental analysis, technical analysis, or sentiment analysis though. That's all for today. And if you like the content, please subscribe to the channel. Stay tuned. I'll see you next time.